Hi there, Shahan. Let me make sure you're on your on your phone. Just invited you up to speak. Let's see what's going on here. Going to be talking crypto taxes today. Let me see if I can get Shahan up on the podium here. Renard, let me also get you up here as well. You guys need to be on your phones. Just keep that in mind. Unfortunately, Twitter Spaces doesn't work on, or speaking on Twitter Spaces doesn't work if you're on your computer. Looks like Shahan is. And by the way, Shahan, am I pronouncing your name correctly before we get started?
Yeah, that's right.
Awesome. Well, welcome and good afternoon, Whale Coin Talk community. Here today with Shahan of CoinTracker. And Shahan, before we get started, do you want to give our audience a quick background into yourself, your origin story, and how you ultimately made the jump into Web3?
Sure. Excited to be here. So yeah, my name is Shihan. I'm a CPA, and I've been focusing on crypto tax issues for the past, I would say, 4 to 5 years or so. I'm the head of tax strategy at CoinTracker, which is a company that helps you calculate your crypto taxes super easily. And some of you guys might be aware of that. Yeah, so that's my involvement in the crypto space.
Right on. Love it. Concise and to the point. Let's talk about CoinTracker. First of all, what is it and how does it work?
Sure. So the CoinTracker is a software tool which connects with your wallets and exchanges and generates tax reports that you need to file with the IRS if you have cryptocurrency transactions. Yeah, so in a nutshell, that's what it does. Without a tool like CoinTracker, it's virtually impossible for you to kind of figure out your crypto taxes because of the number of transactions that you need to reconcile. And if you have transfers in between wallets and exchanges, it's really tough for you to track the basis. And unless you're like me, kind of embedded in the tax space, you wouldn't really know exactly what tax rules to follow for some of these transactions. So our goal is to kind of make all those things kind of easy for you. So you just plug in your wallet addresses and etc. And we kind of give you the tax reports that you need to file with the IRS.
Right on. And this works and integrates with web wallets, hardware wallets, centralized exchanges, if I'm correct in understanding. And can it simultaneously integrate and give you tax feedback from all these different platforms and wallets at once?
Yeah, so we support over 300 exchanges and thousands of coins and protocols. Just to give you an idea, for example, if, let's say you're like a Coinbase user, you would go to the tax center of Coinbase and you would kind of copy paste the API keys to CoinTracker, just a read-only basis. And as soon as you do that, we would kind of read all your transactions and kind of figure out your capital gains, capital losses, and etc. Now on the Web3 side, yes, we're connected with MetaMask of the world, Solana and all those web wallets. I cannot the list is too long for me to kind of share everything that we support. But if you set up a CoinTracker account and go to the section Add Wallet, as soon as you start typing your wallet or the protocol, something should come up and it should give you clear instructions on how to connect that to CoinTracker so you can figure out your taxes.
I understand that you guys are also multi-chain, and you also support hardware wallets, as we mentioned. So for a user that strictly does self-custody and keeps their assets in cold storage, does the hardware wallet integrate directly with the CoinTracker app, or do you have to do it through MetaMask?
For example, let's say you have some Bitcoins held in your ledger. You can just simply copy paste the XPub key from Ledger to CoinTracker, and then you just have to do this once. And as soon as you do it, we just track all your historical transactions and also the future transactions, and we kind of run reports based on that. So to answer the question is we directly integrate with the hardware wallet provider, Ledger.
Correct. Yeah. So you guys do support Ledger, and I'm assuming Trezor as well. What countries are you available in? Is it strictly the United States, or do you support other countries as well?
Yeah, so we are a US-based company, so we support US taxes, Canadian taxes, UK taxes, Australia taxes, and taxes, crypto taxes in India. So those are the main regions that we support. But that said, like we also see people who are from other countries, like Germany and etc., who's kind of using our platform to kind of get the reports that they like, even though we are not necessarily focused on those jurisdictions. But yeah, the TLDR, we support US, UK, Canada, Australia, and India.
Mm-hmm. And as far as user privacy is concerned, how does that work? I know that requires you, CoinTracker, to sign up, and we're going to get into what the cost is. But for people that want to remain anonymous and people that want to have their privacy respected, how does that work?
Yeah, so privacy is super important. I mean, even more important in the Web3 space. So to sign up for a CoinTracker account, all you need is an email address. So we don't ask your name, personal identification information like your address or anything like that. All you need is an email address. And when it comes to connecting the wallets and exchanges, all you have to share with us is the read-only access of your wallet or exchange. So we don't have any ability to see who you are or control your funds. We just need the read-only access. We're also kind of thinking about, again, based on the feedback that we have received from the users, to allow wallet signups somewhere in the future. So when that comes out, you don't need an email address. You can directly sign up a CoinTracker using your MetaMask or other wallets. Yeah, so that's how we kind of think about privacy in this space.
Got it. And one more thing to add there, IP addresses. You guys don't collect any sort of IP addresses or information like that, correct?
I don't know the answer for that, so I had to get back to you on that. I had to check with our tech team.
Right on. Okay. And so what's the cost for all of this?
Yeah, the costs could depend on different factors. Mainly, it's driven by the number of transactions you have in a given year. So if it's like less than 25 transactions or so, you can use CoinTracker free of charge. But anything about that, the annual price could go from $60 a year to a few $100s a year, again depending on your complexity. So if you go to cointracker.io and you can look at the pricing page, you can see the exact pricing that's applicable for you depending on the number of transactions you have in a given year.
Right on. So to get a bit more niche, like how does this work with Web3 games? If you're playing a Web3 game and you're earning a token, let's just say Axie Infinity and earning SLP for the sake of the argument, how does CoinTracker work in calculating those taxes? Does it work at all?
Yeah. So again, when you say like Web3 and DeFi, like, we see innovations happening like every day. So it's really hard for us to, keep up with all these improvements. And by the way, we love to see like, all these, new innovation. I don't know exactly our support for Axie Infinity, but generally speaking, whenever you play a game or whenever you're involved with a protocol, your transactions kind of get accrued into some type of wallet. We have pretty good integration support for wallets and protocols. So if it goes to like an Ethereum address, all we had to do is just copy and paste your Ethereum public address to CoinTracker, and then we kind of read all those incoming transactions. So in the case of gaming, if you're receiving these rewards like, I don't know, every day, every month, or every 5 minutes, we would track that. And we would convert them into US dollars each time you receive it. Because remember, like every time you receive those tokens could have a different USD value. So we recognize that, we convert them into USD values, and we generate tax reports based on that.
Right on. And I'm assuming it kind of works the same with airdrops, staking. What about if you're running a proof of work mining operation? Does that Is that something that you could use CoinTracker for?
Yeah. So if you're running a proof of work mining operation, you connect your wallet that's connected to your mining operation. Again, similar to staking wallet, we would recognize each time you receive those, newly minted tokens, and then we would convert those newly minted tokens to the current USD value at the time you receive it. And we would then show it to you as your mining income on the tax center if you log into the CoinTracker. And that information kind of goes to the appropriate tax forms, and we also generate the tax forms based on your situation.
So how do you guys compare to other protocol, or rather, excuse me, how do you guys compare to competitors in the industry? Like, what are some of your distinguishing features that you've noticed other competitors might not have?
Yeah, good question. So, there are a handful of players, that try to do this crypto tax reconciliation work right now. I think our differentiation mainly lies within the number of integrations that we have. I could say that when it comes to the number of integrations, meaning the number of wallets, coins, exchanges, and other destinations that we have is far superior than other competitors that you mentioned. I would say that secondly, we really care about giving our users a very easy to use interface. We know that taxes can be complicated, and now we had to put crypto, which is another complicated topic on top of taxes. So things could get very, very complicated, and we try our best to give like the easiest user experience without compromising accuracy. When it comes to number of integrations and the ease of use, I believe we have a pretty high edge there.
Sean, I'd imagine that even if folks are using CoinTracker, it would still be a good idea to go over it with the CPA that is familiar with crypto taxes. Do you guys have CPAs, including yourself, that people can hire through CoinTracker?
Yeah, I think you brought up an important topic. So the crypto taxes can be very, very complicated, and especially if you're dealing with some of these edge cases, like say yield farming, or you're earning royalties in NFTs, or there could be some obscure transactions like liquidity providing and etc. So if you're a complicated user, you should know that software can get you so far. And whenever you feel like, okay, I don't know how to treat this transaction, so I don't know how to resolve this error, we generally recommend kind of working with your CPA to kind of figure out how to apply the current tax rules. So obviously, if you have an existing CPA, you can bring that CPA into our platform. So if you have a CoinTracker account, you can invite your CPA to kind of review your account and kind of guide you through certain transactions. If you don't have a CPA, we have a new program called CoinTracker Connect. So you can go to cointracker.io/connect. And through that program, we connect you with a qualified crypto savvy CPA who can help you with your reconciliation needs and also your tax filings as well.
Okay, that's awesome. That was something that I wanted to highlight as well. From my experience, it's always good, even if you're using one of these plugins like CoinTracker, as accurate as they might be, it's good to go over things with the CPA. And it sounds like you guys have ways of connecting users with professionals. I think that the crypto tax guide, the DeFi and yield guide, and the NFT tax guide that you guys have as part of the website look really cool. I didn't have time to dissect them word for word, but kind of skim through. Who are those written by? And what kind of content can readers expect to find? And not just those, but your blog as well.
Sorry, you were breaking up. Could you repeat the question, please?
Yeah, I'm sorry. So I wanted to ask about the collections, right? You have a crypto, DeFi, yield farming, NFT tax guide. So was wondering who those are written by and what kind of content people can find in those, and also what kind of content people can find in your blog.
Yeah, so we kind of love educating our user base and also the industry in general. As I mentioned earlier, like, a lot of people are curious to know like how crypto taxes work, because it's one of those necessary evils in your life. So yeah, you can go to our CoinTracker blog. It's cointracker.io/blog, or we also have collections where we post some of our in-depth guides. On the top of my head, like, two guides come into my mind. Crypto Tax 101 guide, which kind of walks you through like everything that you need to know in simple terms. So if you read that, like, you have a really good understanding of what you're getting into in terms of taxes. Another relevant timely guide that I think you guys should read is the write-off guides. So we analyzed every write-off that's available in the tax code and how they could be applicable to the crypto space. And especially with these, bank exchanges going bankrupt and etc. Like that's a timely guide for you to read. So you asked, like, how we kind of generate these guides. So these guides are written by our tax team, which involves me and a few other folks. Again, we do our research on the tax code. We talk to other industry experts, stakeholders, and etc. And we like to keep these guides super detailed, but at the same time, even non-technical readers can kind of digest things. We don't want to make things too technical, but at the same time, we also want to kind of go into the details of the issues as well. So highly encourage you to read the blogs and the collections if you get a chance.
Absolutely. And for those that are interested, Acti pinned one of those, excuse me, Acti pinned the link to one of those guides to the space. So you can go ahead and check those out. They seem to be very well written. Also, Sean, I was curious to know if you guys are hiring at all, and if so, what positions?
I think we are always hiring. I don't know the latest roles that we are hiring for, but if you go to CoinTracker website and there's a link for hiring, there I think there's always like positions available for folks. If you go to that page, we can find the latest roles that we are hiring for.
Right on. So you've been a CPA you've at least been a CPA focused on crypto for the last 4 to 5 years. How have you seen the landscape, the tax landscape around this industry change and evolve? And I know it's kind of a broad question, but I'm curious to know your professional opinion and your professional experience.
Yeah, so I think the past decade or so, again, like the crypto, was developing, very rapidly, but the tax guidance has not been, that in depth. So if I kind of give you the timeline, 2009, 2010, that's when the Bitcoin kind of came into the circulation. And in 2014 was the year that the IRS first issued its guidance on cryptocurrency. And then the next set of guidance came in 2019, which is 5 years after 2014. So the IRS is kind of trying to catch up to this space. Again, the regulators and the government entities, it takes time for them to kind of catch up. I think we have enough guidance to kind of, apply these rules into basic type of crypto transactions, like, sales, cashing out, spending cryptocurrency, earnings, and etc. But when it comes to some of the complicated transactions, like, let's say wrapping a coin or providing liquidity, earning interest in a liquidity pool, or yield farming, or all these other type of complicated transactions, we don't have any direct guidance issued by the IRS. So that's where the judgment of your crypto tax advisor comes into the play.
Yeah, so I'd be really curious. Well, a couple questions. So for people that were mining Bitcoin or trading Bitcoin before 2014 and they're still holding that Bitcoin, do they have to pay capital gains tax, or how does that work?
Yeah, I mean, even before the 2014, guidance, the general rule in the tax code is that if you earn any type of income, you got to pay taxes. So say that, you're a miner who's mining Bitcoin in, let's say, 2011. each time you receive those new Bitcoins, you had an income recognition event, meaning you had to report income. So hopefully it would have been, much less, because at that time Bitcoin wasn't worth that much. So let's say that some miner in 2011 mined one Bitcoin, and it was at the time he mined that coin, it was worth $100. So in 2011 tax return, he would technically have to report $100 worth of income. And say that person today sells that coin for, let's take an easy number, let's say $30,000. And if that miner is considered to be an investor, so in other words, this is a miner, who's kind of running like a mining operation out of his basement. So it's not like a business or anything like that. It's just like a random person, just like out of curiosity, he mines Bitcoin. So when he sells that Bitcoin for $30,000 today, he would have to pay capital gain taxes on $29,900. 30,000 minus $100, which is the cost basis. So in this case, because he held on to that coin for more than a year, that 29,900 would be subject to what's called long-term capital gain tax rate, which is more beneficial than short-term capital gain tax rate. So in my example, that $29,900 would be subject to a 15% tax rate. So that's how that works.
Yeah, crystal clear. And I'm gonna get a little nuanced here, Shahan. So bear with me. But you are a CPA, and it's always fun to pick your brain. For what if someone's holding what if someone's buying and holding Bitcoin, and they make a transaction with that Bitcoin? So they buy a house, or they buy a car, or they make any other purchase. Like, are they still getting hit with capital gains taxes?
Yeah, unfortunately, yes. So here's the logic. I know that this is something not super intuitive to non-technical folks who are listening to this. So according to the IRS, cryptocurrencies are treated as a property. Although we call it a currency, according to the IRS, it's treated as a property. So say, for example, you paid $1,000 for a Bitcoin a few years ago, and today it's worth, again, $30,000. And you're spending that $30,000 worth of Bitcoin to buy maybe not a house because it's too little, but let's say you're buying a car or something like that. In that case, what you're essentially doing is you're disposing, or in other words, selling a property that has appreciated in value. And therefore, you had to pay capital gain taxes on that difference, which is $29,000 in my example. So I think the thing to understand here is that a lot of people think that for me to have like a taxable event, I need to receive some type of cash in my hand, but that's not necessarily true. In our example, you never received cash in hand, but you still have a taxable event because you're selling a coin that has appreciated in value, and you're receiving something that is worth $30,000. So receiving cash in hand is not a requirement for you to have a taxable event.
Okay, crystal clear. Next example I want to throw at you. Let's say you receive an airdrop of tokens worth like $10,000 for the sake of the argument, and you don't touch that airdrop, and you honestly you might not even notice it for a few months. And that token tanks to, I don't know, like $1,000 in value. The next year, the next tax year, or rather the next year when you do your taxes in April, what are you paying taxes on? Are you paying it on the 10,000? Are you paying it on what it's currently worth, or is it no taxes at all because you haven't sold the token yet?
Yeah. So this is a controversial topic. Again, IRS shed some light on this in 2019 when they issued the revenue ruling 2019-24. So the TLDR is that if you receive a new coin as a result of an airdrop, it's taxed at the time you receive, equivalent to the market value at the time you receive that coin. So let me give you an example. So let's say tomorrow I open up my wallet and I may have tested like this early platform, and as an appreciation for that, I receive a new coin, let's say XYZ, to my wallet. At the time I receive it, that coin is worth, let's say, $10. So in that case, I would have to report $10 worth of income because that was the value at the time I received the coin. Now, in reality, what happens is, you receive a coin at the $10, but it could be, several days from today, that coin could tank in value. Let's say it goes down to $8, or actually, let's make it better. Let's say it goes down to $2. So in that case, what you can do is you can sell that coin at $2 and recognize that $8 loss. And that way, you recognize income at $10, and now you're recognizing a loss. So you end up, you don't have to necessarily pay taxes on that entire $10. You can kind of net things out and pay the taxes on the $2. This is how things work at a super high level. Obviously, there's exception to these rules and complications. But generally speaking, if you receive an airdrop, you got to pay taxes based on the value of the tokens at the time you receive them.
Understood. Okay. And you said it's controversial, meaning it's something that is still being discussed and it could change in the future. Well, why do you say it's controversial?
I say it's controversial because the way that airdrops have been happening has changed quite a bit since, I would say, 2018, 2019. I remember the old days, you would have a certain wallet or something, you open up the wallet like next day and automatically your wallet balance has increased. And because you see this new coin in your wallet. Now, I remember maybe 2021, 2022, the way that you can receive airdrops kind of changed. Now there's a link. You had to go there to claim it. So the question is, what's the amount of income you report? Is it at the time you claim something, or is it at the time you're eligible to claim something? So we don't know those specificities. And again, if the ruling is okay, you can report income at the time you are claiming the airdrop, that could open up a loophole, right? Because then some people would claim it, I don't know, maybe 5 years from today when the value is so down, or maybe it could go the other way. So when I say it's controversial, like in that claimable type of airdrop scenarios, it's unclear when a person has an income recognition event. Is it at the time you actually claim it, or is it actually the time you're eligible to claim it? So that's the controversy.
Okay, yeah, I can see how it becomes complicated and controversial when you break it down the way you just did. I would love to know about NFTs. So you guys have a tax guide strictly for NFTs. When I think about NFTs, it seems pretty simple. You buy it at a certain price, you sell it at a certain price. Whether it's a gain or a loss is depending on when you sold it, but it should be pretty straightforward, right? Why do we need an entire guide on NFTs?
Yeah, so I would say for the most NFT investors, what you just said applies. They're investors of NFTs. You probably bought a VR for like a certain amount of money, and if you were to sell it above that price point, you'd have a capital gain. If you sold that below how much you paid for it, you would have a capital loss. Now, that's I would say majority of NFT users in the US, I would say, fall into that category. Now, that said, there are some complications associated with NFTs. Certain NFTs, they pay you royalties each time that gets sold in a secondary market. So there's a different way about kind of tracking those royalties and calculating taxes on that. And there are also fees associated in NFTs, because most NFTs can only be purchased using Ethereum or some type of other coin. So when you buy an NFT, generally speaking, that also results in a taxable event, because again, you're disposing of one crypto asset, in this case, a coin, to buy an NFT. I would say the third and the biggest, it's not a complication, but something to be aware of, is that if you are a creator of an NFT, so this is a business or a person who creates NFTs to sell, they're subject to a totally different type of taxation compared to investors. So if I'm a creator, whenever I sell something, I would report ordinary income under my business, and I can also deduct expenses related to that creation of NFTs, and you would pay taxes on the net profit. And that income could also be subject to other taxes like self-employment taxes, state taxes, and that. Another complication when it comes to NFTs, again, this is like super. I'm going into too much details, but there could be situations where you're a creator of NFTs and you have what's called a trade or business, and you're selling these NFTs to people in other states. Then, depending on the state rules, you're required to collect sales taxes on these NFT sales. And there's not many software solutions that allow you to kind of collect sales taxes, and you have to now register with each state to remit those sales taxes. So those are the complications associated with NFT users.
Wow, something that I didn't imagine would be so complicated got pretty complicated pretty quick, but thankfully you guys have a guide for it, and thankfully there are people that we could talk to learn more about how it all works. I skipped over a question earlier, and I want to come back to it. I would love to know about your partnerships with Coinbase, OpenSea, TurboTax, and H&R Block. To what extent are you working with each of those entities?
Yeah, so Coinbase and CoinTracker, we have been long-term partners. For Coinbase, if you go to their tax center, you should see a tile for us. And again, if you're like a complicated tax user who has multiple wallets and exchanges, you should be able to find CoinTracker through the Coinbase tax center. For OpenSea, again, we also have a strong partnership with them. We are the exclusive partner for taxes, I believe, for this tax year as well. And we are integrated with TurboTax, H&R Block, and a bunch of other tax filing software as well.
Beautiful. So, Shahan, I do have, I had a community member that wanted to ask a question, but it looks like he's having some connection issues. So I will kind of continue until he can. Oh, there he is. Let's see if we can bring him back up. And in the meantime, while he's connecting, Shahan, for young CPAs or even CPAs that have been in the game for decades that don't know much about crypto, but can see that this industry is growing rapidly and want to get involved and become a crypto-focused CPA, what advice would you give them? What literature can they read? What information can they digest? Like, how do they get started?
Yeah, this is a good question. I get these questions all the time, especially when I do webinars focused on CPAs. I think my answer for this is I don't think there's like a single book or like a text that you can read to be like up to date in this space, because the space is constantly changing. And if you're reading a book, I can guarantee that the content of that book is already somewhat out of date. I think you had to do a few things to establish yourself in this crypto niche. I would say before we kind of focus on any niche, just make sure you have the strong fundamentals. You should know how tax returns work, how the IRS codes work, and I would say you should have at least, I don't know, maybe 3 to 4 years worth of experience dealing with individual tax returns and cases. Once you have that, very good foundational understanding of taxes and how to serve clients, then you can kind of get into the crypto space. The way that I kind of keep myself up to date is by listening to some of these podcasts in the crypto space, attending these types of sessions on Twitter, and also by being on Twitter, because we call this crypto Twitter. Anything that happens new in crypto space, I think generally it's on the Twitter first. So it's a kind of like a combination of things that I do to kind of stay up to date on this space. it's hard for me to kind of give you just like one resource that you can rely on to be up to date, because to my knowledge, there's no one resource that can make you up to date. You just have to consume a bunch of different feeds.
Yeah, it seems to be the case for not just CPAs, but crypto tax attorneys or anyone else trying to get into the industry. There's not one source of information. You got to take bits and pieces from across a broad range of outlets and try to come up with your own point of departure. That's at least my anecdotal experience. Let's go with Rahmat first, and then we're going to go to Alan after.
Yeah, thank you, Noah. Can you hear me clearly?
Yes, sir.
Okay, I have a few questions. So just to be clear, does CoinTracker offer a different subscriptions plan for each of its products? And additionally, are there any discounts available for users who wish to subscribe to all of CoinTracker's products?
Yeah, so CoinTracker has different subscriptions. I think the easiest way to find out the subscriptions we have and the services that we offer is by going to the cointracker.io, and you can see the different products. When it comes to discounts, if you're like a subscriber for existing product, or if you subscribe to the blog, like there are like certain discount codes and stuff like that you get. And at the same time, like reach out to like DM our CoinTracker Twitter. I think I see them on this chat, and they might be able to help you with available discount codes.
Okay, wonderful. And for subscription plans, do users have to pay in fiat, or cryptocurrencies are also accepted?
Currently, we only accept fiat for those payments.
Okay, got it. Okay, so I was also wondering, you mentioned about this CoinTracker's NFT Center. Will it provide users with notification when the price of a specific NFT is about to increase or decrease based on the various factors?
Not at the moment. Right now, the NFT Center is focused more on giving you tax insights, not necessarily other types of insights. But obviously, like we'll take this as feedback and I'll relate to the right team in our team.
Okay, so I also read about this tax professional software. As a tax professional can sign up and use the CoinTracker tax software to provide seamless and accurate file cryptocurrency taxes for the clients. So it got me thinking that how are you verifying the credentials of the tax professionals who sign up for using the CoinTracker software, or anyone can use it?
Well, so if it's a tax firm, like let's say like a tax firm, like some accounting firm in the US wants to be like a premier account holder for us, I mean, we would have a introductory call with them, and obviously figure out they're like a legit firm before they can subscribe for a CoinTracker tax professional account. So that's something that we do. But that said, there are a lot of individual tax professionals and enroll agents. They create their own tax professional account and they invite their existing clients to help with crypto taxes. So in that case, the client already is working with the tax professional, so they know it's a real tax professional. So hopefully I answered that question, but let me know if I need to clarify anything.
No, you answered that. Okay, I was also wondering that what maximum number of wallets and exchanges account users can link with the CoinTracker
app? To my knowledge, there's no limit to the number of wallets and exchanges you can connect. There could be limits to the number of transactions we can process, but I believe it's at least in the millions. So if you have more than 1 million transactions in a year, I mean, talk to us. I mean, then we can kind of explore other solutions. But there's no many individuals, who have that many transactions in a year.
Okay, got it. Okay, final question. I read on your website that you will keep the CoinTracker in sync with the user's wallet and exchanges, so the information is always up to date. I would like to know more about how is this auto sync feature works, and whether users are required to log into their exchange account for this to happen, or it's not necessary.
It's so as when you connect your exchange your wallet into CoinTracker, that's all you have to do. And we do periodic syncs. I think it happens every day or something like that. But let's say like, you want to like see like right now, and if that's the case, you can log into CoinTracker and hit the sync button. Then we will sync it to you like at that time itself. But other than that, we sync it like every day, every other day, depending on the chain. I don't know the exact answer for that.
Got it. Thank you so much for answering. Over to you, Noah.
Yeah, no worries. You're welcome.
Thank you, Rahmat. Alan, you next, sir.
Hey Noah, how you doing? Thanks for having me. And Ramat, great questions, man. Really in-depth questions. So, Shihan, I've been signing up to a couple of these different tax trackers, and some of them are more intuitive than others. And I kind of had a little problem with yours right now. I just signed up as you were talking, and I added my wallet, but it only adds one chain at a time. So, for instance, I have my main wallet. I trade on multiple different chains. I had to add it multiple different times, and apparently I have like just a spare $38 million somewhere laying around that I didn't know that I had. So I appreciate that. And that's somewhat sarcasm, because it's a bunch of scam tokens that I was not allowed to get rid of, and I'm having a real hard time right now getting rid of that. So if you can kind of help me out with, I mean, this should be something I think would be very intuitive. Like you can just report an airdrop as a scam or spam token and the value be taken off, but it seems a little bit harder than it should be. Is that something you guys plan on working on?
Thank you for the feedback. So if you go to the transactions, so those, you mentioned that you're seeing some scam tokens, you can ignore them. So when you ignore them, like you can just like a drop down and you can say ignore, then we don't take that coin into future calculations.
Okay, so I did that. I did that on I figured out how to do that. You got to go find there's like, first of all, there's like 6 different places for me to copy my wallet address for some reason. And then when I got over to the 3 dots, I tapped on that, did ignore transaction, went back, the value was still there. I ignored a couple of them, but it still says I've got multiple millions of dollars in scam tokens on them. So I don't know if maybe it's just mine in particular or something else.
Yeah, I mean, it's hard for me to give you an exact answer without kind of seeing your screen. You can obviously send like a support ticket. The scam token thing, again, it's a feature that a lot of people find useful, because obviously they won't, sometimes, they receive certain things, they wouldn't even know about it. So CoinTracker is kind of like a way for you to see, okay, I received these scam tokens, maybe I should get rid of them. So that's why you're seeing all that feed in the transaction feed. But I understand it could be annoying as well sometimes. Again, it's hard for me to give you an accurate answer without seeing the screen. So send like a support ticket, and somebody will be in touch with you.
Okay, no problem. And also just a quick disclaimer that I don't recommend anybody interact with any scam tokens whatsoever, no matter what. Don't try to burn them, don't touch them, leave them there, ignore them. It's the safest thing to do. But yeah, I'll do that for feedback's sake. But this is definitely a user thing that I think you need to maybe work through a little bit better on your product. And I'm glad to help you with that if you want me to.
Yeah, thank you for that.
Thank you, Alan. And last up, we have Captain Levi.
Yeah, thanks, Noah. Could you guys hear me all right?
Yes, sir.
All right. So I have 2 questions. I think you've talked about it before, but I would like you to get clearance on some aspects. When I checked your website, I saw that you're currently tracking 50 billion assets. Is this literally, and this is actually a huge number, how do you keep track of the assets that get robbed? And what do you do with the ones that become obsolete? Are they still kept on the record?
So I'm not sure how to answer that question. So yes, we do track 50 billion assets across all of our users right now, inside CoinTracker. Again, maybe let me know if I'm not answering your question correctly, but if your coin is not valuable, or it became worthless because of rug pull or anything like that, you have the ability to ignore those transactions or manually edit the value of the coin, so it doesn't go to your calculations of taxes. So Hope I answered your question.
Yeah, I think I get it now based on that answer. So there's a news article that actually just got my attention, and that actually struck another question. There is actually Binance woes that Binance pivoting to TUSD, and we also have Binance that means the coin. Give me a second to get that. Okay, so the issue here is that the coin that actually mints BUSD, they've been giving orders to stop the minting because Binance is probably having issues with regulations. Now, the question that arises from here is that is there an asset behavioral pattern where users are warned that an asset isn't behaving like it used to, especially when it's a well-known asset? Maybe, for example, it starts detecting irregularities in its transaction patterns, say heavy flooding, for example. Are users who are exclusive on CoinTracker, are they warned that, okay, this particular asset isn't behaving the way it's behaving before, and you should probably check it out and do something about it?
Yeah, I understand what you're looking for. So I think what you're looking for is insights related to the industry and what's happening with exchanges and certain protocols, because we have this unified view into transactions across millions of users that we support. So the crypto insights is something that we are having internal chats on. Again, right now, our current focus is to kind of figure out this tax problem. But parallelly, we are kind of thinking about ways we can surface some of these insights, like you mentioned, on the CoinTracker app as well. So stay tuned. Maybe you will see something before the end of this year on that respect.
Okay. I'm looking forward to it. So my final question, give me a second to get it up. Okay, so my final question is that I actually saw on the payments platform here that there is a special and a unique one for the pricing. And the pricing I'm actually talking about here is the unlimited pricing. I see that this one is it's on a one-on-one basis, and it isn't like the recommended free hobbyist and the premium. So is it that you happen to have a one-on-one section for the individual or company that happens to click on this particular pricing item?
So I would say, so I think, again, I don't know exactly which link you're talking about, but if you drill down on that link, you can see the pricing tiers inside the unlimited tiers. If you cannot find it, just send a quick DM to the CoinTracker Twitter account, which is on this space, and they might be able to direct you the right way.
Okay, that actually sounds good. I'm actually on your pricing, so it's the one after the best one, which is the unlimited plan. So concerning my first question, I was talking about Paxos that currently issues BUSD that was ordered to stop minting BUSD coins. So as you already answered it, that you're actually still on it, but I think it would be a great idea to be able to pull that off. I really appreciate your detailed answers to my questions. I'm wishing you guys the very best. And I hope that CoinTracker stays bullish moonward. Over to you, Noah.
Thank you.
Thanks, Captain Levi. Shahan, we're at the end of the broadcast. If you have any final words or thoughts that you'd like to share with our community, go ahead and do so now. But I really appreciate you coming on. It was a very informative podcast and space. We learned a lot about crypto taxes, especially with respect to the United States, and all the nuances and all the hard work that has gone into building your ecosystem. So thanks again.
Yeah, thank you. Just final couple of words. Just so you guys know, April 15th is a tax deadline. I mean, we got several weeks left. If you have any crypto transactions, highly encourage you to use a tool like CoinTracker to kind of figure out your gains and losses. And then you can use those reports with your tax filing software like TurboTax, or actually you can use CoinTracker to directly file your taxes as well. This was like a new product that we introduced a few weeks ago. Or if you want to use any type of software, you can generate the reports from CoinTracker and use your existing CPA to file your taxes. So get your taxes filed correctly, so that way you don't have to worry about any IRS headache.
Right on. Thank you again, Shahan, for coming on. And thank you, Whale Coin Talk community, for being here. Remember that everything on these broadcasts is meant for educational purposes only. Nothing is financial advice. So be safe out there. We'll see you all again in about an hour. Take care.
Thank you.